Welcome to Currency Watch. This is Chris Keene from a Keene point of view. New York trading was on today as traders came back in from the Labor Day holiday to start off the week, and there were very little fireworks to get everything going. The Euro USD and Great Britain Pound USD both moved up to test the top of their respective ranges, but they both moved back down towards support levels. Heading into tonight's trading in Asia trading, more specifically, we have the Aussie GDP report, which I believe is expected to come in at 3.7%. If this number is better or lower than expected, we could see a move in risk sentiment to have a little bit of activity in Asian trading. If not, we could have to wait until Thursday to have the markets really begin to pick up. But that is where volatility should kick in. On Thursday, we have the release of the ECB and Great Britain pound interest rate decisions. The ECB interest rate decisions shouldn't be the real kicker. It will be the press conference that followed, where it is rumored that the ECB will announce some sort of bond repurchase program. More specifically, the plan should focus, or has been rumored to focusing on short-term maturities, 3-year bonds and lower. But this may, many traders believe this may be put on the sidelines because it won't be until next week it will be discovered if the German constitution even would allow the country to give their thumbs up to such a plan. But we will find out on Thursday, and then on Friday we have the non-farm payroll release out of the USD, which should shut down the week of trading. So we should have a lot of volatility at the end of the week, but we may drift along once again on Wednesday, testing the supports and resistance of the respective levels. Let's look at the Euro USD really quickly. We're going to look at 3 measures. The Euro USD, as you can see, it moved up, and it's in this trend line. It's in the top of its triangle. And the top it's testing the top of the triangle. The top of the triangle is created by a descending trend line from last October's highs, and the bottom of the triangle is created by an ascending trend line that is the pair has rode higher since the beginning of the month. As you can see, the pair is currently sitting right at support on this trend line at 125.60, but it's been basically sitting there all day, all New York trading. A hold or break of this level is going to dictate the price action over the next day or so. A break below this, and we could slowly drift down towards the 124.80 level. But if we do get a bounce off this level and a push up towards the trend line resistance, we could get another break. We could get a break or a bounce lower there. One thing is for sure, that the pair will break out of this very narrow range in the short term. So what I'm going to watch heading into the trading is this 125.60 level, and try to get a hint on which way the pair is going to want to head over the next 24 hours. The next pair we're going to look at is the Aussie USD, just because the Aussie has its GDP report out today, and it's currently sitting right at mid-range. When the GDP report comes out, like I said, if the number is better than expected, we could see a bit of strength in the Aussie, as most expectation. The reason for the recent decliners is the belief that the Chinese economy is slowing, thus bringing down the Australian economy with it. If we can see any signs of positive news out of Australia, we could easily see the pair move back towards the 102, 103.20 level, and then based on the short-term price action, we could break above back towards the initial breakout level of 104.53. But then if the GDP comes in line, we may continue to meander sideways or move all the way down towards the 101.75 area. The last pair we're going to look at is the USDCAD, just because a lot of traders seem to be interested in this pair right at the moment. The pair is sitting right at resistance at 98.40 and 98. This 98.40, 98 level is the yearly lows, well, the lows since last January, and a move below this level could open the pair up for a measured move lower. But we could easily get a bounce off this level, at least back to the 99.50 in parity, before traders can come back in to try to test lower. That is the end of Currency Watch. This is Chris Keene from a Keene point of view. Remember to keep your trades keen and to play it safe.